Traders at EDC Securities say they expect a third quarter earnings to lend some support to banking and oil and gas firms, while other segments may witness a sell-offs amid subdued earnings. Olamofe, analyst at EDC Securities, joins me now for more market updates. Olayemi, thank you for joining us today.
Thank you for having me.
Well, as market prepares for the Q3 numbers, what names are you looking out for in terms of what the numbers could potentially look like?
All right, so thank you. For us, we stick very bullish on banking names. We understand that the CBI at some point came out to guard against banks not paying dividends and spending on operating expenses from their FS gains. But we still think that because of the FX, the potential FX gains that a bank will book in Q4, we expect that to affect sentiments towards banking names. We believe that investors would most likely position in names to leading through them for the releases of their their Q3 results. And for oil and gas names, strengthening crude oil prices and is expected to provide some level of support for their performance and also impact on sentiments positively.
Now, we know that investors have been quite savvy. They've been cherry picking and they've been sticking with stocks, those companies with, or stocks with fundamentally sound, stocks with strong fundamentals, if you will. But for this, I'm just curious, for the individual companies that these investors would be or invest in, what kind of line items, which of the line items would they be focusing on? Is it a good cash flow, great cost-cutting measures, just an overall strong balance sheet?
So I think it's a mix of everything. Investors won't just focus on just one line item. Investors are most likely take a holistic approach to judging which kind of names they should invest in. And like you already mentioned, investors at a time like this in a very challenging macroeconomic environment will want to stick to fundamentally sound names. And then to qualify as one, it shows that this kind of companies will be quite defensive. They will be able to weather the storms, even in the thick of the most macroeconomic headwinds. You still expect that they still show out something decent. And more importantly, they are companies that they have a history of paying dividends. And you will see that play out in most of these banking names. The expectation is that the results will remain very robust. See what they've done in terms of interim dividends, which is which is well above what they did historically. I expect that to probably repeat itself at the time they declare their full year results. And so it won't just be one metric. For strong balance sheet is very important. Very robust growth and earnings is also very important. And more importantly, is sustainability. So aside from the FS gains for some of these banks, going into next year, investors will be looking at what would afford sustainability in their financial reports, not just something that's going to be one-off. And that's why we believe that banks will enjoy all of this ride for the rest of this year and going to 2024. It's really going to be dependent on the state of the economy in terms of direction of the FX.
Right. Let's talk about trading so far this week. Second day of the trading week. The market started on a rather slow note. I believe the OSHA index lost about 0.25% yesterday. But talk to us about the stocks that you're watching this week. I know we did see significant demand for stocks such as Nascon and Dangote Sugar last week, and that appears to be continuing. But talk to us stocks on your radar this week and stocks that you see investors bargain hunting.
Yeah, so if you look at what played out today, it's safe to say that we begin to see renewed interest in the markets. Markets closed 43 pips up, and that's like the highest gain you've seen over the past 5 days. And if you look at most of those names that actually gained, they're mostly banking names, right? And so we still remain very bullish on banks, GC, Zenith, Access, UBA. For non-banking names, we are also very bullish on what we believe that buying WAPCO is going to be a long-term investment decision. We don't think it's going to deliver short-term dividends. So if you are buying into stocks like WAPCO, you expect that you want to wait it out. But for banking names, tier one names, I think they are very good at the time like this.
Or what about the consumer names? Your thoughts on how they've performed so far this year and your forecast for how they're going to close the year?
So with the exception of some names that ride on the back of mergers, so it's around the mergers and the mergers and we're able to rally on that, likes of Dangote Sugar, NASCOM. If you look at the whole consumer universe, you see that investors' interest is beginning to wane. And that's just a reflection of the consequences of heightened inflation and scarcity of effects on their groups. I'm saying because of the probability of that playing out, which is very high, in their Q3 results. We don't think that with so much of investors' interest in some of these names in the year, we think investors will be very cautious as to how they position in these names. And like you already mentioned, maybe bargain on when they think prices are already
Right.
dipped significantly. But we don't see so much of upsides from these current levels.
All right, Olayemi, we'll leave it there. Thank you for bringing us up to speed. We appreciate your time on the show today. Olayemi Olamofe, analyst at EDC Securities.